Good afternoon, everyone, and welcome to our fourth episode of Making Tax Digital. So in terms of speakers today, let me first introduce myself. My name is Mark Purdue. I'm the lead product manager, and I'm now responsible for MTD and personal tax. Leslie, I'm sure you're well familiar with from previous MTD sessions. And joining us today from HMRC is Chris Jennings. He's going to have some slides on the MTD as well. And also joining Chris, who may well be answering your questions, is Lenny Barry. He won't actually be one of the main speakers today, but as I say, he'll be there to deal with any technical questions in the Q&A session. So what have we learned so far in the MTD episodes that we've run? The first one was back in February, and Dorcas there provided you with an overview of MTD, what the process is and what the expectations were. Episode 2, we shared some survey feedback, and also we demoed the quarterly submission process. In episode 3, the focus was very much on the annual flow for MTD, and again we provided a demo of the annual submission flow. In this one, what I want to do is spend a bit of time just reflecting on the differences between self-assessment and Making Tax Digital, and also thinking about the actual workflow and process, and thinking about potential pressure points that you need to start considering now. Leslie will then cover some of the known 2027 exclusions. So not everyone is going to be mandated for that final annual 2027 date. And then, as I say, HMRC have an update as well. So there'll be some slides and a discussion from HMRC. So before we provide any further content, I'd be grateful if you could answer this poll question. I am confident that my firm is prepared and my clients who are mandated understand the requirements. So I'd be grateful, give you a few minutes. Okay, it's starting to slow down. I've had good responses. About 75% of you have responded. So in terms of the results, 27% either disagree or strongly disagree, whereas the rest of people are either agreeing or neutral. About 40% are neutral, with 31% either agreeing or strongly agreeing. So it seems to be a real mix in terms of how people are feeling prepared and how prepared they feel that their clients are. Okay, so just a very quick recap before we move on. Who is impacted by MTD and HMRC later? Chris will go through this in a bit more detail, but hopefully this is all familiar to us now. So from April, your sole trader and landlord clients, gross income from those sources over 50,000, they are within MTD unless they're otherwise excluded, which Leslie can talk about a bit in a moment. And then from April 27, that mandation limit drops to 30,000. And then from April 2028, it drops to 20,000. So you can see this 3-year phasing of the majority of sole traders and landlords coming into MTD. What I want to do is focus on, just for a moment, the differences between self-assessment that you know and love and you've been familiar with for probably 25 plus years, and what MTD and what the differences are going to be in terms of that annual flow. So if we think about and just recap on self-assessment, life starts in the tax software, you get the data from the client, you prepare the return, you send the return to the client for approval, the client approves the return, and then from that tax software, you submit it to HMRC. So there's this quite linear process from you to the client to HMRC. MTD is going to turn that flow on its head slightly. So there's what I feel could be potentially alien concepts, which we all need to get familiar with. So life still starts in that tax software, but this time the source of the data may be HMRC or it may be the client or a bit of both. So the client via some other app, for example, might have already shared bank interest or gift aid payments with HMRC. So the first thing the tax software does before we start to think about that annual declaration, the annual tax return flow, is we find out what data HMRC already have. We then, once we've prepared the return, and this is where the alien concepts, I'll bring steps 2 and 3 together so I can explain it in one step. So rather than once you've prepared the tax return, it going to the client for the client to approve, once the data has been prepared, it has to be sent to HMRC before the client sees it. The reason for this is HMRC use that data, so the data they already hold, plus the data that you as an accountant provide them to update as well. They then generate a calculation, and that calculation is the document that in MTD the client has to approve. Okay, so before it goes to the client for approval, the data has already been through a process of going to HMRC and a calculation has been generated. Once the client has approved it, then within the tax software, assuming there are no changes, then all we have to do in the tax software is effectively say, in layman's terms, the draft data we've already sent you, that is now correct and final. If the client can't approve the calculation at step 4, then we effectively have to go back to step 1, correct the data, resend it to HMRC, regenerate a calculation, and then send a revised calculation to the client. Okay, so this is where the process is a different flow from self-assessment. So conceptually, it's the same, doing an annual return at the end of the year, but there's this new approach that we will have to be familiar with. Another issue that I'd just like to touch on, if we focus for a moment on our self-assessment flow, I think we're all familiar with this. From the 6th of April, we go through a submission period where you get the data, you prepare it, your client approves it, and you submit it. Okay, and that happens from April to the 31st of January. Then I could say that February and March, nothing to do with self-assessment, we will take time off, but we know that's not really how it works. But this is a linear process. All of your self-assessment clients are all in the same process, going through the same process at the same time. If we now reflect and think about the differences with MTD, obviously we know that there are 4 quarterly periods instead of 1 annual period to start with. And so there are 4 mini submission periods. So at the end of each quarter, you have to do a submission. Okay, so at the end of Q1, you do a submission. At the end of Q2, you now actually do a combined submission of Q1 and Q2 combined. End of Q3, you do the 9 months. End of Q4, you do the 4 months. Where I think the challenge may lay with how you think about process within your firm is, on top of this quarterly process happening for 1 year, there is the annual process happening for the previous year. Okay, so for the same client, you've effectively got these 2 processes running side by side. So there are a couple of instances, 3 instances, where you are effectively doing 2 jobs for the same client at the same time. Okay, that in itself is different to how self-assessment works. The other level of complexity, though, here as well, is with self-assessment, I'm making the assumption that you use 1 tax product for all of your clients. You use CCH personal tax, you as a firm, you use that product, that's the product you use, and this top flow all happens in one place and you can report on it really easily. This bottom flow may be happening in different products. The quarterly submissions may be happening in a different place to the annual submission, and the quarterly submission may be being made directly by the client, and so it's not a submission you're in charge of anyway. And so managing the workflow, managing the process, and understanding where is my next job to be done has this extra level of complexity. So at this stage, all I'm doing is calling this out as something that as a firm I feel that you should focus on and start thinking about how you're going to manage this process. Obviously, software will go some way to help you with this, but this is something that I feel people haven't focused on. They're focused on the fact there are 4 submissions, and 4 submissions increases the workload. But what hasn't necessarily been considered from a practice management perspective is how you monitor the work to make sure it's completed successfully. Those are the 2 items that I really wanted to cover from the self-assessment versus MTD perspective. Just before I hand over to Leslie, what I'm now just going to cover off is what our priorities are as Wolters Kluwer. Obviously, our number 1 priority at the moment is supporting a selection of customers in the pilot. We are in a position where we can do the UK property and the sole trade submissions, and we will shortly be launching our first bookkeeping integration. We're in the process of doing the foreign properties, so you can't do that today, but that will be launching very soon. Priority number 2 is supporting those pilot participants with the annual submission that we know they're going to have to do on or after April 2026. So what I'm going through at the moment is making sure my priority of what I need to deliver for that annual submission aligns with what the pilot participants are actually looking for. My focus at the moment, and this is going to be clarified in a survey that will go out in the next couple of days to pilot participants, is that the main areas that we need to cover for the annual, on top of obviously sole trader property income, is bank interest, dividends, high income child benefit charge, pension contributions and gift aid. But that survey results from pilot participants obviously will absolutely influence that delivery order. Third and final is we know that by the time we get to April 2027, obviously that's when the first mandated annual submission is going to be due. And so throughout the remainder of this year into 2026, you'll start to see staged releases of functionality for MTD from us, focusing on things with feedback we've already had from the pilot as an example. So it would be great if I could generate a report on that pilot, the quarterly submission, and also a process to get it sent to the client for some form of approval. So that's something we're looking at. Other than that, it is making sure we build out the full scope of functionality. And just for clarity, MTD and SA100 have, as a headline, the same scope. MTD doesn't sit alongside an SA100. You don't do quarterly submissions and then do an SA100 return at the end of the year. Hopefully we're all aware that MTD is the 4 quarterly submissions plus an annual MTD tax return. So we've got to make sure that when we hit April 2027, we've got that full breadth of coverage that we need to have. There are some HMRC exclusions, and I'm now going to hand over to Leslie to talk about some of the most important ones. Oh, apologies, before I do, alongside all that MTD work, then we are also building out the SA100 capability in the cloud as well.
Thanks, Mark. So Mark covered earlier about the thresholds for an MTD for income tax. So those over who've got self-employment, a sole trade, UK property or foreign property with gross income over 50,000 in 22 or 25 will be in MTD for income tax from April 2026. In the spring statement and in the budget, there's been some deferrals and exclusions. I just want to cover the ones that we know about. We've requested a definitive list from HMRC, and when we receive that, we'll share it on our website. So the ones that we know about, say, defer to April 2027. Taxpayers who are currently required to complete an SA 109, so somebody who's not resident. This would cover people who would be in the FIG regime, which is in the 25-26 tax year. So the earliest they'll be able to join MTD is April 2027. Other ones that have been deferred for a year, recipients of trust and estate income, people using averaging adjustments, so farmers, other types of self-employed people, those eligible for qualifying care relief, and the last one about non-resident foreign entertainers and sports people. Then there's some that are going to be deferred. So we can go to the next slide, please. So these are deferred for the life of this Parliament. So Mr. Religion, Lloyd's underwriters, then recipients of the married couples allowance and the blind persons allowance. And then in the budget, there were a couple that were excluded. So these are permanently excluded from MTD. So taxpayers have got a power of attorney and those under a deputyship. As I say, this is our understanding at the moment. When we get a definitive list or we get an updated list from the revenue, then we will share that. Chris, over to you. Thank you.
Thank you, Leslie, and good afternoon to everybody. So I'm Chris Jennings. I head up both the testing phase and the software engagement elements of Making Tax Digital. I'm just going to split my presentation into a couple parts, really. A fairly brief recap of the principles of MTD, and I'll try not to cover the things that already Mark and Leslie have gone through. Then talk a bit about, well, how can you best prepare for the changes? And we are literally only 4 months out now from April 26, so it's just round the corner, especially taking into account we have Christmas alongside peak SA time as well for you guys. And then I'll talk a bit about what we've been doing in the testing, what we've been learning in the testing, and then just finish off with a bit of a further clarification on at least one of the other budget announcements from last week as well. So if I could just move on to the first slide, please. I'm not going to spend ages on this part because both Mark and Leslie have covered this. But just to remind people, 3 cohorts for Making Tax Digital. The first one, April next year. And that's for people with a gross income or gross turnover of over 50K. And when we talk about qualifying income, it's people with either self-employment and or property. And then April 27 over 30k, and finally April 28 over 20k. What I will do if we move on to the next slide, though, is just give you a bit of a working example of how that will look, and in particular how people can find themselves in those different cohorts. So if you look at this example here, you've got Patrick, who is a plumber. And in the first scenario, Patrick's self-employment income from plumbing is £21,000 a year. Now, there is a question mark about how good of a plumber Patrick is if he's only charging £21,000 for his plumbing activities, but we'll just leave that to one side for a moment for the example. So you'll see he's got £21,000 gross income. So when will he be mandated? Well, he's not over 50k, he's not over 30k, but he is over the 20k, so he'll be in April 28. The second scenario, Patrick's still a plumber, so he's got £21,000 a year from his plumbing activity, but now he's inherited a property from, unfortunately, his parents have passed away. He's inherited the family home, which he's decided to rent out, which he's getting £20,000 a year rental income from. So now Patrick's income for the year is £41,000. So still not over 50k, so not in April 26, but you will see he's now in April 27 as he's over the 30k. And in the final scenario, Patrick, still plumber, so still getting £21,000. He's getting a £20,000 rental income from the inherited property. Well, actually, him and his wife have realised that they quite like this rental business. It's quite profitable. So they've actually purchased another UK property, and they've got a 50% share between him and his wife. And so he's getting £10,000 out of the total 20,000 from him and his wife. So you'll see his total income now is £51,000. And you'll now see that Patrick in that scenario is mandated, so legally required to join Making Tax Digital from April 26. So the big takeaway there is that it's gross income and it's self-employment and property combined as well that makes up that turnover figure as well. If we could just move to the next slide, please. So what are the key things that are changing because of Making Tax Digital? The top one for me is actually the most important one. This is the big behavioural change, that need to keep digital records. People focus particularly on the second one, which I'll come on to, the quarterly updates. However, it's the digital record keeping that is the key to all this. If digital records are being kept and kept well, the rest of Making Tax Digital becomes much, much simpler. So if you've got clients who are already keeping digital records or really up for keeping digital records, I suspect the impact of the change will be much less on them compared to, say, and I'm sure you've all got stories of clients who will come to you at the end of the tax year with either a shoebox or a carrier bag full of receipts. It's going to be a bigger behavioural change for theirs. So must keep digital records. They've got to submit quarterly updates using compatible software. Now, there isn't any HMRC software. It's all third-party software, such as Wolters Kluwer, CCH, and others. They are only quarterly updates. They're not tax returns, and I'll come on a bit more to what's needed in those quarterly updates, but they are updates, not tax returns. You still need to do the end of year tax return, but the big change being that now this needs to be completed in compatible software as well. So you can't do that if you're an MTD through HMRC software. It has to be done through third-party HMRC compatible software. And as I've said, all of those submissions need to be made through HMRC recognised compatible software. If we can just go on to the next slide. And I won't labour this point much because I know Mark mentioned it before, is actually you don't just need to have one software product. It's entirely up to you how many of those compatible products you use. They usually fall into two categories. So you've got what I usually call is that all-in-one software product. So that does everything for you. So that will keep the digital records, it will do the quarterly updates, and it will do the end-of-year tax return. Or you can use multiple software products to do any or all of those parts. So you could have one software product that does the digital records and does the quarterly updates, and then you could have a completely different product that does the end of year tax return. The beauty of HMRC is the choice is up to you, and it's whatever works for you. Some people will be much more comfortable with a single product, but other organizations, because of the way they're set up, will also be equally comfortable with using multiple products. It's absolutely fine as long as they're HMRC compatible products. If we can just go to the next slide, please. So those two key changes in terms of digital records and quarterly updates. So when we talk about digital records, what is it that actually needs to be included in the digital record? And it is as simple as 3 key things. So the amount, the date, and the category. And the category is things like expenses, etc., and things like that broken down as well. But that's all that needs to be in the digital update. Then the quarterly update, as I said, so they are literally, but as they say, they are literally updates. So they are summaries of unadjusted mandated income and expenses. So we don't need to do any of those adjustments in the quarterly updates. It is just literally the summaries. A bit similar to the VAT return, if you like, in terms of that the input tax and the output tax are just summaries. But the key difference is this isn't a tax return. It is literally just a summary. So when you hear people still say that MTD is introducing 5 tax returns, that is not the case. There's 4 quarterly updates and 1 end of year tax return. And if we could just move to the next slide, hopefully this will help set that out to you in terms of what that year, for that tax year, will look like for making tax digital. So on the left hand side you've got the customer or the taxpayer, and again we can use Patrick the plumber as an example if you like. You'll see in this example you've got Patrick who's got 2 self-employment incomes. So the first one possibly the plumbing activity again. He's also got another self-employment income now. Let's say that when he's on the plumbing, he started to realise that he can pick up some of the old equipment there and he's been able to sell it on eBay. So he's got a bit of a side hustle. So he's got 2 self-employment incomes. He's also got the UK property income, and he's also got a foreign property now that he's purchased. So you'll see that he's got 4 income types there. Now, each one of those creates a requirement for 1 quarterly update. So you'll see in this example, there's actually 4 quarterly updates that Patrick needs to do every quarter. Now, on the face of it, that looks super, super complicated. However, I go back to that point about the key of keeping digital records. So each one of those income sources will have digital records attached to them. And if they're being kept in a really good way, then it is in essence effectively clicks of buttons in software to make those quarterly updates. You'll see as the year goes on there, we've laid out those 4 quarterly updates. So you've got quarter update 1 due the 7th of August, the second one 7th of November, the third one 7th of February, and the fourth one 7th of May. Now, on these quarterly updates, they're actually cumulative. So what that means is if you look at the first quarterly update, update 1, that runs from April to June. Now, the second one doesn't start from the beginning or from July. It goes all the way back to April and then runs through because it's cumulative. So when you get to quarterly update 4, that covers the whole tax year. So it would be from April all the way to the end of March. And the bonus of that is that you don't ever have to make any adjustments to any earlier quarterly updates if for any reason there's an error in them. So say something was missed out or you just weren't able to fill it in completely, you can just catch up on the next quarterly update as well. So that makes it much easier to do, and hopefully goes a long way to show that they are literally just quarterly updates and all we're expecting is summaries. They don't have to be perfect. Now, what I would say, though, is the more accurate you can get them, the better the in-year tax estimation we can give you will be. So every time you submit a quarterly update, we're able to give you an in-year tax estimate, not just based on the amounts you put in the quarterly updates, but also any of the sort of pre-populated information we have from the systems in the background as well. And I won't talk too much about the end of year process because I know Mark was covering it earlier again, but that just shows once you get to that end of year, you've got those 4 quarterlies that then feed in. It's at that point that you need to do the allowances, the adjustments, the loss claims, all of the things like capital gains tax, dividends, all of those sort of adjustments before you get the calculation back. You then declare and then you make that end of year tax return, albeit, and this is really important, it should be a much, much simpler process because you're going to get a lot more pre-populated information from HMRC systems at the point that you submit that end of year tax return as well. If we can just go on to the next slide, please. So how can agents best prepare for the changes that are just round the corner? Now, we think there are two key things you can do. So the first one is to join testing, and you're able to join testing at any point all the way up to the end of March next year as well. So you're not too late to join testing, and at the point you join it, you don't need to catch up with previous quarterly updates because they're cumulative. You just pick up from the update that's due at the point that you join the testing. Now, there are lots of good reasons to join testing in terms of helping HMRC shape the system, test the system. However, I think the real benefit for joining testing, and I hear this all the time from all the agents that are actually currently in testing, it effectively allows you to test drive what MTD is going to feel like for you and your clients as well. So it's all well and good understanding what the principles of MTD look like and me explaining how it works as I just have, but it will be different for each one of you and it will be different for each of your clients. So being able to understand the impact and then to react with things like, well, what's my internal processes going to look like? What about letters of engagement? How much am I going to charge people to do this? Who's going to do the quarterlies? Am I going to do it? Am I going to deploy bookkeepers? Or would I even allow one of my clients to do it as well? All of those questions you'll be able to easier answer by joining testing and actually experiencing it yourself. Now, from HMRC's perspective, we totally understand that that's quite a big ask to get people to join testing. So what we said is we'll do two key things for people in testing. First, there are no penalties on the quarterly updates. So there will be no late submission penalties on the quarterly updates. And of course, the quarterly updates don't create a payment point. The payment points have remained exactly the same. So there's no payment on the quarterly update. So there is no late payment penalties in a way on those. And also, we give you dedicated exclusive access to a customer support team. So what that means is at the point you join testing, we then contact you and give you a direct telephone number for this dedicated support team. And you can contact them Monday to Friday, 8 till 6, and they will pick up the phone straight away. It's a completely different number to our normal advice lines, and they will help you out with anything Making Tax Digital or anything self-assessment income tax related as well. Now, one of the questions we get asked quite a lot is, well, how many clients should I put into testing? And what we're finding out from speaking to people in testing now is there's a little bit of a sweet spot emerging in terms of people saying roughly around 5 to 10% of their client base is quite an ideal number to put in. And the key to that is what usually happens is you identify some clients straight away that are ideal for testing because they're very compliant, they do everything you want them to do, they're probably pretty digitally savvy as well. So people start by putting one or two of them in. And what tends to happen is that just validates what you already know. The real benefits to testing comes when people get a little bit more willing to go a bit further than that and put in people that maybe not quite as digitally savvy. So they put in a bit more of a variety. And it's at that point they get to understand, well, what's it going to be like for these people? How different is it going to be? But testing is totally voluntary. You don't have to join testing. And you can put as many or as little as you want through testing as well. But I would advise that if you can put people in testing, still join up now because you'll get an awful lot from it and you'll get ahead of the curve as well. Now, if for whatever reason you don't want to join testing, that is absolutely fine. But what we would suggest is that you sign up early for mandation now. Now, HMRC will send a letter to every single taxpayer who is mandated to join MTD from April 26. Now, the vast majority of those letters could only go out after the tax year, the tax return, the end of year tax return is in at the end of January, 31st of January. So that means a lot of those letters are going to land on doormats roughly around February or March, which doesn't give you much time. Now, if you know that you have clients that are already over that 50K threshold, sign them up now. Look, it takes on average about 5 minutes to sign up. However, there is no bulk sign up for Making Tax Digital. So if you've got X amount of clients, you have to times that as 5 minutes. And what we don't want in a very busy period of time is that you leave it to March and all of a sudden you've got all of these clients to sign up. It takes 5 minutes to do, so start doing it now. And once you've signed up, you don't have to take any further action. So they just sit there in the background as well until April 26. So it's a really good way to get prepared for next April. We can just go on to the next slide, please. I just want to give you a bit of a really quick overview of what's been happening in testing, how far we've got in testing. So we've had 2 years of testing and we're into the second tax year of testing, although the first tax year still hasn't finished as well because of the crossover, and that tax return isn't due till 31st of January of next year. So, but what we've effectively tested already is that core MTD journey. So we've already tested people can sign up, and we've made some huge improvements to that sign-up process, including bits around the agent services account. We got a lot of problems with the agent services account in terms of people being able to operate it properly. We were able to make changes, create step-by-step videos, etc., and improve that. We've also been able to test quarterly submissions. Now, we've had all 4 from last year, but it's this year that we're already onto the second quarterly and obviously the first cumulative, and we've been able to successfully test that. We've approximately got about 5,000 people signed up for testing, and every quarter we have approximately about 3,000 people submitting quarterly updates. We've got a real variety. We've got a mixture of people with just one self-employment income. We've got multiple self-employment income. We've got people with self-employment income, UK property, and people with foreign property as well. So we're testing it across that real key variety of customers. We'll continue to test that core journey. Our real quality testing is going to be that end of year tax return. And I think Mark was touched upon it before, is that what we really want to do in testing is once we get past that fourth quarter next year, is hopefully we'll start to get some early submissions of that end of year and really be able to robustly test that. But the testing's on track. We've got really good confidence in all of the IT we've built because we've already tested that in a sort of laboratory environment, if you like. So we've really robustly tested that till it breaks. The live proving element of it is now backing that up, and we've already tested sign up, quarterly updates. We've tested people can use enabling multiple agents and all of those parts as well. And we're just flowing that through now up to the end of year tax return. I just wanted to finish on the next slide, and I won't spend too long here because I know we want some period of time for questions, but there were some key budget announcements last week. Now, I'm not going to go over the parts that Leslie already really well covered on the deferments and the exemptions, but the other part that was announced last week, which is a really good news item, is that we're going to be able to soft land both the late submission and late payment penalties for April 26. So there will be no late submission penalties on the first 4 quarterly updates next year. Now, what that doesn't mean, though, is that we don't want people not to submit quarterly updates. It's really important that you sign up and you submit those quarterly updates. What we're saying there is that actually we're giving you a little bit of leeway to enable you, if you're going to be late for whatever reason, that's fine. We won't penalise you, but we're absolutely expecting that you will still do those quarterly updates. And as I said, if you're keeping digital records, which you'll need to do, it's actually much easier to submit on time as well. If you don't do those quarterly updates, you won't be able to do the end of year tax return, which will have penalties attached to it for late submission. We're also going to soft land the late payment penalties as well. So instead of an additional 15 days after the payment deadline, you'll have 30 days. And in those 30 days, if you pay in full, which includes arranging a time to pay arrangement, you will get no late payment penalty. Now, there is late payment interest, and if we didn't have that, there will be no reason for people to pay, but you will not get a late payment penalty as long as you pay within inside those 30 days after the payment deadline. And then last and final slide from me, which gives us some nice amount of time for questions, is there's a QR code here, which if you hold your mobile phone up to that, take a picture, it will take you to everything you need to know on gov.uk around how to sign up either for testing or sign up early for April 26 next year. There you go. That was probably my quickest ever canter through Making Tax Digital, but I think I've just about stuck to time as well.
Excellent. Thank you, Chris. Okay, so I will go through the questions. I see that quite a lot of questions have been answered whilst I've been talking, whilst Chris has been talking. So I think I'm right in saying you can see those answered ones. In terms of open ones, I will ask the questions out loud and then we'll decide who's best placed to answer them. So the first question is, will iFirm have the ability to easily send out deadline reminders for clients to supply their info for their quarterly updates? I'll answer that one. In the short term, no, I don't think it will. Longer term, absolutely. The way we're approaching iFirm is not necessarily just thinking about, does personal tax need a reminder system? But as an accountant in practice, you need reminders across the board. You need client collaboration across the board. So what we don't want to do is come up with a solution just to satisfy MTD quarterly submissions. We're taking a step back and making sure we approach things like client collaboration from a practice level rather than from tax level. So absolutely longer term, but not in the short term, no. And then Laura has a comment. I think it was your example of Patrick. I think the point Laura's making was that if your example was linear, as in year one, this was his position, then year two, it was this, in year three. Yeah, that's fine. Do clients need different software for trade and properties? Can multiple trade and properties be put onto one software? So I don't know if that's one you want to pick up, Chris or Lenny.
I can pick it up from a HMRC perspective. It literally depends on the software provider. So some software providers will allow you to do that all in one product. They may have restrictions around licenses and stuff, but that is very specific to each software provider. But in theory, you could just do it with one software provider.
Okay. And so, Mark. Okay, go on, Leslie.
So there's different things. You've got the quarterly submissions, so that you'll need to have a digital record keeping system for that. So that could be a bookkeeping solution for property. There are things like Hammock and Patmar. And then you've got a choice. You can either do the submission from that software, or if you're using a different piece of software, say for the tax return at the end of the year, what used to be called the final declaration, you can bridge it into there and submit it there, and then do the end of year tax return. So it's really, as a practice, what you want to do, who you want to do the bookkeeping, and also consider how you're going to charge for this. So the taxpayer's doing the bookkeeping, you're doing the year end, that might be one thing. If they are doing the digital records and asking you to review it and do the quarterly submissions, there might be additional fee. And if you're having to keep the digital records for the customer, there might be something else. But in terms of software, as long as it's approved, then you can choose one or more depending on your needs. Thanks, Mark.
Excellent. Chris, this is one for you, I think. I don't know whether you're going to be able to provide a constructive answer, but I'm going to read it out. How did this quarterly submission get mandated and by who? We currently have a dysfunctional system, and it goes on from there. But I don't know whether you've got anything you can add from a historic perspective as to the benefits of quarterly submissions.
I mean, I totally get it, and it still comes up, and it's totally understandable that some people do struggle to see the benefits of it. But I would go back to the point that, you know, if you're keeping digital records and you're keeping them really well, the actual quarterly updates become so much more simpler. And the people we've seen in testing, an awful lot of people come back and said, I was really worried about the quarterly updates, how much extra work it was going to take, etc. What we're actually finding is people are finding it much easier than they expected it to be as well. Now, you know, there was an awful lot of consultation on whether we did it quarterly, whether it was slightly longer than that, or whether it's slightly shorter than that as well. We had to land somewhere. There was some benefits seen in terms of almost aligning it to similar to VAT, etc. So there was an awful lot of consultation, but the bottom line is we are where we are with it. It's happening from April 26. We just need to make sure that everybody is well prepared for that as well.
Okay, thank you. I'm going to read out Liz's question, and then I myself am going to expand it slightly because I think there's more scenarios that the same answer will cover. So if someone is mandated for rental income from April 2026, so they're in MTD because of their level of rental income, but then become non-UK resident halfway through the year, and that could equally be one of the other exclusions we're aware of. So it might be they would start to receive trust income, etc., etc. What I guess is, just to summarize it, what's the process of if you get into MTD, but in the short term you can't complete your MTD journey? What's the process for getting back into self-assessment?
So there's a couple of things there. So in these examples, they're quite specific because of the exclusions, etc. So they would need to contact HMRC, make us aware of it, and then effectively we can, we'll look at the case, and then we can move people back into that old system. There is a nuance to it though, in terms of if you change that example around and just said that the turnover dropped, and I think that's an important part, because once you're in MTD, you are in MTD for 3 years. So what that actually means is very few people from a turnover perspective are not going to leave MTD, because time you get to those 3 years, we're over the 20k. So it's only if their turnover has dropped below 20k, or if they've actually ceased trading, etc. And again, they would need to contact us, and then we can advise of the next steps.
Great, thank you. Then a question from Laura, which I think is to do with the penalty easement in the budget. As there are no penalties for late quarterly updates now, what is the incentive for our clients to join MTD before doing the Q4 and end of year returns?
I mean, people are, the simple answer is people are legally mandated to sign up for MTD, to keep those digital records, and then to make the updates. The key again, I think, is one, the sign up, and then the keeping of the digital records. I do truly believe that if you keep the digital records, in some ways it's almost as easy to submit the quarterly updates than it is to make that choice not to. Now, I do think there's some professional standard questions there around, particularly agents, etc., because of the legal requirement, but we are fully expecting and wanting people to comply to signing up and submitting those quarterly updates as well. The reason we've given that sort of soft landing is because we absolutely appreciate that it is a big change for people, and there is potential there for people to be slightly late. We wouldn't want to penalise people, even though it's penalty points, for being, say, a day or two late for those quarterly updates.
Okay, great. And I think very much connected to that question is Caroline's next question, which is, if there are no penalties, can I just do a Q4 submission? So I do 2 submissions, Q4 being all the year, and then an annual. My understanding is you still have to do Q1, Q2 cumulative, Q3 cumulative, Q4 cumulative. Is that right? So technically, Caroline's kind of correct there, that from a system perspective, you because of the cumulative, the earlier ones get marked, and you get to the fourth one, which of course is the one that covers the whole year. So technically you could do that, and some people will do that regardless of the penalties, because you might have seasonal trade, for instance. So you might have nils for the 2 of the quarterly updates, for instance, and 2 of them not. So there are real reasons for doing it. I think there is fundamentally something very different about people choosing not to do it because they're not getting a penalty, which is kind of linked to the question before, isn't it? And our expectancy from a department's perspective is that people will do their best to comply with the MTD requirements as well. And of course, even if they did do that, you're just setting yourself up in a way, because you're going to need to do the 4th quarterly one, so you're going to need to have kept all those digital records. And the better you get at doing it this year will make it easier for you for the following years as well, where those penalties will apply as well. Okay,
Chris, sorry, because I think the point is that if there were penalties, then the agents can say to the taxpayer, if you don't give us the information, we can't do it. Now that's taken away, and some people may not be familiar with MTD, or there might be reluctance, like, why do I need to do 4 submissions? So it's less, I think it's less about the agents, it's more about focusing on the taxpayers and how they do this. And whilst you say there is a requirement to keep digital records and it has to be done by the due date for the submission, without those penalties, it makes it, a number of agents have expressed it makes it harder for them to go to taxpayers and say, give us the information now, and they'll say, what? And perhaps if we don't, oh, nothing. Okay.
No, I do appreciate the position there. I think I mean, I think there's a balance to be had, isn't there? I think if we sat here, what would people prefer overall? Would we prefer to be penalising people in that first year, or would we prefer the position that you've just suggested, Leslie? Now, I don't think there's a silver bullet. I don't think there's an ideal answer. I do believe HMRC landed with the right answer in terms of soft landing those penalties, but that doesn't take away that there will be some degree of challenge, particularly in that agent space, to make clients comply to it as well. We will, as a department, though, even though there will be no late submission penalties, we will still be chasing people for any submissions, quarterly updates that we don't receive as well. So it's not as if you won't hear from HMRC, and we will be making it clear that, you know, in a normal year, you would be charged a late penalty here as well.
Okay,
thanks, Chris.
The next question relates to signing up mandated clients. So what is the actual deadline for a mandated client? Do they have to be signed up by the 5th of April, i.e. before mandation kicks in, or is it just in time to do that first quarterly update?
That's a good question. I have to. I'll take that one away and get what the sort of technical and official answer is on that as well. I mean, of course, the actual requirement is that they start keeping digital records from that date, 5th of April. So they must keep the digital records. I'm really clear about that. If they didn't sign up for then they can sign up a bit later. However, you know, they're compressing the window of needing to keep digital records, making sure that they've got software, and all that software is linked together as well. I will come back, unless Lenny has the more official answer in the background. Technically, they should be signed up for them, and they've got to be keeping digital records. In terms of the actual sign up, I think there is a little bit of flexibility there, but we certainly wouldn't want to be encouraging that unless there's a different answer you want to add, Lenny.
Sorry, I'm busy typing away answers to other questions.
I'll take that one away then, that's no problem.
Okay. So what the next one? Okay, so this is from an accountant. Obviously, we're struggling to get clients to sign up to testing. They don't want to do it before they have to. So it's the next part of the question, which is the you know, that I think they're looking for feedback. Is it possible through CCH, and then I'm going to put in brackets, or any other software provider, to set up a dummy client so they can test the software and the process before they include real clients? We feel it is important to work out pricing, etc., for a quarterly return. So I can answer from CCH perspective, which is no, we can't, not in the live environment. I don't know if you've got anything to add to that, Chris.
No, similar. I mean, it's something we've looked at, but the challenge we'd have as a department is that the value of testing, or as I think it's more live proving, and that's the key term, live proving, is that you're able to actually flow all of that live data across all of the HMRC ecosystems. So it literally tests it. Now, if we were to try to do that with dummy data, we run the absolute huge risk of then contaminating our system with dummy data, and that would be potentially catastrophic for us to be able to do that as well. So that's why we haven't been able to do it. I appreciate as well, it's not always easy to encourage people to sign up for testing as well. There is a challenge there.
Okay. The next question is from Laura, and I don't know if this is directed partly at Wolters Kluwer and partly at HMRC. When will the APIs for the end of year tax returns be available? So from an HMRC perspective?
So I think all of the APIs for all of the income types we know about are already available. Mark, you or Leslie can tell me if I'm inaccurate in that. Now, if there's any new income types that are bought in, etc., then they will also be made readily available as part of our roadmap. So we have a roadmap that we supply to all developers, which sets out exactly which APIs are there. But I think all of them, if not the absolute vast majority of them, are already available. But you know, I'll let Mark and Leslie come in if there are any that are outstanding still.
I think as a general thing, yes, the revenue APIs for the end of year tax return are there, including triggering the calculation and like signing off the year as final. There are some which are coming later. So partner income, I think, is either December or April into the production environment, I think for 26, 27. So those ones will follow along later, but the bulk of the APIs are already available.
And then just to add from a Waters Clear perspective, as I had on my second pillar priority on my slide, you know, we've delivered the majority of the quarterly functionality that's needed. So annual, which I think is what the question relates to, that annual tax return, we're prioritizing the areas that I covered, which is going to be bank interest, dividends, high income child benefit charge, gift aid and pension contributions as a first tranche, unless pilot participants tell me that's the wrong approach. But obviously then into 2026 and beyond, we will then deliver across all of those HMRC APIs well ahead of the mandation. The next question, so this is from Chris. So if total income is over 30,000 in 26-27, so you're triggered for MTD for the following year, but you already know that you're going to be below that mandation limit in 27-28, do you still need to sign up and go through MTD? I think I know the answer, but Chris?
You can fire away, Mark, if you want. You can test yourself and check if you don't mind. Go for it. There you go.
I'll answer it. So you're over the threshold. You need to join MTD from April 28. The threshold reduces to 20,000, and either you need to be under the threshold for 3 years, or the businesses need to cease for you to come out of MTD.
Exactly. So you need to sign up in those in that scenario.
Okay, excellent. The next question is about those who we've just said are exempt. So the example given here is power of attorney. Is the exemption automatic, or is it something you need to apply for? So if you've got a client who's got power of attorney, what happens?
So we're currently looking at finalising the guidance and the process for that as we talk. The announcement only being last week in budget, which followed the spring statement. So we're pretty close to actually finalising the guidance for exactly how that works. So we'll let you and others know in due course.
Okay, thank you. The next question is about clients getting notified they're going to be within MTD. Is that notification copied to agents, or is it just relying on the client opening the letter, reading it and actioning it rather than...
At present, the only thing we've been able to commit to is that every taxpayer will get that notification. We are looking currently at how possible it will be to get copies out to agents. But as it stands currently, those letters we're guaranteed will go to the taxpayer, but we can't guarantee at the moment that we will also be able to send copies to agents.
Okay, thank you. Then somebody said, I'm not sure why my questions aren't being answered. I'm going to predict it's because we haven't got to them yet, but I will continue anyway. They're showing up in my questions. Please, could someone answer the following 2 questions? I put in a little more info in case there was a misunderstanding. Do clients need different software for trades and property, i.e. one software license for property? I think we've answered that one. This is from 20 minutes ago, so that might be why.
On multiple properties, on the self-employment, each of the self-employment is a single business, so there's one submission. Again, if you, for example, were using Xero equipped with somebody else, you could do all those in that particular piece of software. When it comes to property, whether it's UK or foreign, it's a single submission of all the income from that property business. If you've got multiple properties in the UK, then that's all aggregated and goes onto a single submission. If you've got multiple properties in foreign jurisdictions, so America, Spain, Bahamas, again, it's aggregated. For the pilot 25-26, it's reported by country, and then from 26-27, it's going to be reported by property, but it's still a single submission for the UK property business and the foreign property business.
Okay, thank you. We answered that one. Okay, late payment penalties. it's jumped around and I've lost it now. So mention was made of late payment penalties in relation to pay. Is it in relation to payments from annual MTD returns? As I understand it, there is no payment along with the quarterly return. And then
That's spot on. So there's no payment date created by quarterly updates. They are updates rather than tax returns. It is just purely that end of year payment, which isn't changing in any particular way under MTD in terms of the deadline date.
Okay. And I think you've just answered this question, but I'm going to answer it anyway. Could HMRC start implementing quarterly tax payments in line with the quarterly updates in the coming years?
So we certainly don't have any plans, short term, medium term, or even long term, to do that at this time. Now, it'd probably be naive of me or anybody else to say that at some stage in the future, possibly HMRC might start to look at it. But that would be an awfully long way off in the future. So at present, nothing short term, nothing medium term, and certainly nothing long term to do that as well.
Okay, great. Then Jane asked a question about pricing. Do we have pricing available? We do. So if you have a chat with your account manager, they can talk you through the options for MTD for mandation or earlier. Then there's a question, how is jointly owned property going to work? I think this is trying to understand the logistics of it all. Mm-hmm. Will any software provider be able to submit for multiple owners and aggregate multiple properties with different ownerships? Do we have a view on that from HMRC? Or
so from my perspective, again, I don't mean to be deliberately vague, but it does depend on the software developer themselves. Now, there are some developers out there, and there's at least one or two I can think off the top of my head that deal with joint property in the way that's described there as well. But then other developers have decided to deal with it slightly differently as well. And I'm not sure what your plans are with joint property, Mark, as well from the CCH perspective. But there are other developers out there that deal with it in that sort of way. And I know Leslie mentioned Hammock as one of those. They're a property specialist software developer. So it does depend on the developer themselves. If you go to gov.uk and look for software choices, the new tool on there allows you to drill down to particular developers based on your particular needs. Now, it won't go down into this level, but if you were to search for developers that specialize in property, you'll get a list of the developers that are property specialists, and you can go and speak to them if that is the sort of software that you feel that you would need. But I'm not sure what CCH are going to do in that for joint property.
Yeah, so I'll cover off. So at the moment, when we think about doing quarterly submissions, and let's just focus on UK property, the process that we've got at the moment is we are effectively that bridging software for an Excel spreadsheet for your Excel record keeping. So provided your multiple properties are managed in a way that we can generate that one update across all the properties, then that's absolutely what we will do. Without wanting to call out specifically Hammock, the scenario that's been outlined, I'm pretty certain that Hammock covers that, where you can have multiple different types of joint ownership and they can collate all the data and do the submission. Okay, a question from Fozia. When are you likely to have the new MTD template sheet? Okay, so bit of background. Part of the quarterly submission you can do in iFirm. As I touched on, we've got bookkeeping integration, so you can import data. But the primary use case, I think, is going to be for those clients who haven't got bookkeeping. So we have an Excel template. The Excel template we've got at the moment is just a standard template for you to create your own transactional sheet beside it. We are going through final testing of our own sheet so that you can share it with a client. They can record their transactions, their date, description, category, etc., and amount. And then it will automatically collate the data for the submission. Leslie, I don't know if you've got any more up to date in terms of when that's likely to be available. It was going through final testing last I heard.
No, there's a bit extra. So at the moment, when we copy from the spreadsheet, we copy the values, and because these are formulas, so we're having to tweak the software to take the calculated value. It should be available. I'm hoping to be available either by the end of this year or very early next year in January.
Okay, thank you. There's just an anonymous comment. Oh, hang on, so as Steph's quite rightly pointed out, we have run out of time, so we will go through the remaining questions and deal with...
Sorry, Mark.
Yeah.
I know we've run out of time. There's one on free software. Maybe Chris could answer that one.
No, I think it's a fair question. So there is already free software available on the market. I think there's approximately about 14 products that are classified as free. Now, I have to be really careful when I use the term free, because free by definition usually comes with some degree of restrictions as well. So free software might not be appropriate for every taxpayer, but there is free software on the market. It's not supplied by HMRC, and we made a very conscious decision that we wouldn't be producing any software ourselves. We will be wholly reliant on the third-party software market, but that market has reacted and there are free products out there. But I will just say to people that free comes with certain restrictions, and free wouldn't be suitable for every taxpayer. It generally suits people with very, very simple tax affairs, maybe one in self-employment, income trade, etc. Maybe not really complex end-of-year type of deductions, etc., that needs to be carried out as well. But there are over approximately about 14 listed free products on the software choices page.
Okay, great, thank you. But yes, we have sadly got to the end of the allotted time. So the remaining questions we will go through and we will answer, and we will share answers to all outstanding questions. Okay, thank you, everyone.